Well, welcome everyone to this episode. Today I have the pleasure of interviewing Tim Macready, who is based in the United States in beautiful Colorado. Tim is the head of global advice for a really exciting organization called Brightlight. They have a focus on impact investing, which is what we're going to be talking about today. And Tim's going to tell us a bit about Brightlight, but also about his role. Tim and I actually met a couple of years ago when he was head of investment for Christian Super in Australia, and did a fabulous job there managing their portfolios for their clients based on Christian values, and obviously being able to tap into the impact investing market. So look, Tim, great pleasure to have you with us today. Thanks for being with us.
Thanks, Alex. Excited to be here.
Yeah, look, so just give us that quick sort of background, a snapshot of yourself, but as well as Brightlight as well, because obviously it's probably an organisation that a lot of retail investors won't be familiar with. So yeah, tell us a bit about it.
Yeah, sure. So, a personal background: grew up on the mission field in Papua New Guinea. Moved back to Australia to go to college. Studied kind of investments and insurance, and started working from a young age in the super industry. Kind of became disillusioned with that through a bunch of providential circumstances. Ended up working for Christian Super and kind of really wrestling with what it means to be faithful in every sense as Christians with what God has entrusted to us. Spent 15 years doing that, and then in 2016, 2017, we actually started to take part of that investment team and move it into Brightlight so that we could work not just with the Christian Super assets, but with organizations and assets more broadly, just to bring a values-based approach. And that's what I do today. We work with clients around the world, helping them to wrestle through what it looks like contextually for them in their context, to apply their values in their investment portfolio, whether that's thinking through how do they take in public equities, in listed equities, how do they take those companies that are working contrary to their values out of the portfolio, all the way through to what you've mentioned there in the impact space. How do we find opportunities that are genuinely, intentionally seeking to create positive impact that aligns with a client's values? And so, we work with charitable foundations, family offices, pension funds, all kinds of groups that are looking to align their portfolio and their values.
Fantastic. No, it must be an exciting place to work, and it's obviously a growing and expanding area. So let's just unpack that a bit though, in terms, because I think you sort of almost covered it in your explanation of what Brightlight does, is what is this kind of impact investing area? And I guess how does it differ from, say, traditional investing?
So when we talk about impact investing at a really kind of holistic level, we're talking about how do we change a portfolio so that it's more deeply values aligned in ways that are creating impact. And that happens to varying degrees. In the listed portfolio in the public markets, often the most significant impact you might have is removing a holding that you think is values misaligned, or having a deeper exposure to companies that you think are well values aligned. Or you might, and in fact we do, engage with companies to try and influence them for positive change. That would traditionally be known as kind of responsible investing. And then moving into the impact investing, or maybe ethical investing. But moving into the impact investing space, we're really talking now about investments that are deliberately seeking to create a specific positive impact outcome. And that might be, for example, a social impact bond that supports children exiting the foster care system to seek to create better employment and education and housing outcomes for them. It might be a microfinance fund that is lending solely to small and medium enterprises in emerging and frontier markets to help people develop self-sustaining incomes, to develop businesses so that their kids can go to school and they can have secure housing. It might be a fund that builds specialist disability accommodation for people with specific needs, housing needs, so that people with disabilities can live in local communities and engage in those local communities effectively. So there's all kinds of different types of impact that people are seeking, but the common theme is this intentionality around creating impact alongside financial return, often market rate financial returns, and a commitment to measuring the kind of impact that is being created.
Yeah, I was going to say, well, that was one of my next questions, was around the impact. How do you guys measure it? I mean, obviously there's measuring the impact, but there's also measuring the real rate of return as well. do you juggle that?
Yeah, so thankfully, we've gotten as a financial services industry, we've gotten quite good at measuring risk and return. So the impact investments, we measure risk and return exactly the same way you would for any other investment. We look at measures of volatility, measures of loss. We look at growth in the portfolio, income. More complex and much more difficult. Typically, the way we start is by articulating a theory of change. Why is it that we think that deploying capital in this way is going to create positive transformation and positive impact? So, for example, if we take kids exiting the foster care system as an illustration, why do we think that helping them into education, employment, and housing outcomes is going to have a positive social impact? Well, we know empirically that children exiting the foster care system are at higher risk of unemployment and incarceration. We know that education, stable jobs, and stable housing are a key input into overall life stability. And so the theory of change is if we can get them into stable jobs, stable education, and stable housing, then their outcomes over life in terms of education, employment, reduced risk of incarceration are going to be significantly better than if we didn't do that. And so that's the theory of change. Now then, how do we measure whether we're being effective? Well, in the short term, you can measure things like, are these kids exiting the foster care system? Are they in stable housing? Do they have a job? Are they attending classes? That's your kind of short-term metrics that you can measure that point towards success. Long-term, what you want to measure is what are the life outcomes? And that can take decades and be very difficult when you might be looking at an investment that's only a 5 or 7 year investment. So typically what we do is we identify what we think are going to be pointer metrics, pointer outputs, or intermediate outcomes that lead towards the long-term outcome that we like, that we're looking for. If you take a microfinance investment, for example, it's a lot simpler. Are they able to repay their loans regularly? Is their business growing? Are their children attending school at a higher rate than the broader population? Is there housing in terms of safety and security, and even things like fuel? What fuel are they using? Gives you a good indication of whether overall economic stability is being enhanced. And you can measure those kind of outcomes pretty easily now in a microfinance industry that's fairly mature. That's kind of how we look at those kinds of things.
Enormously powerful, but as you say, and also difficult in the sense it could be very long term, some of these outcomes, and entire towns, entire cities, etc. over time, massive impact. Fascinating. It's a fascinating area. How then does an individual, so if we're talking about an individual investor, how would they access some of these types of investments? What's the approach that they should go about in starting off on this journey?
Yeah, one of the challenges in the space at the moment is that most of the opportunities that are available to larger investors, US what would be called accredited investors, people who are investing more than $250,000 at a time. That's not most people. There are, what we're seeing is a small number of products being available at much smaller amounts. So here in the US, there's an organization called Calvert that issues impact notes. You can buy with as little as $5,000. In Australia, most of the way that people might access these opportunities, and in fact, in any market where most of the capital is held by professional asset managers and pension funds and the like, there are pension funds. Christian Super obviously did a lot of this when I was there, but there are other superannuation funds that are doing impact investing. There are charitable foundations and the like as well doing these kinds of things. And so it really varies by jurisdiction. In the US, there's a lot more product available than in Australia. As I said, Australia has access, individual consumers can have access to some of these impact investments through their super fund or through other places. So very jurisdiction dependent. Overall, however, the trend that we're seeing is more access for more people to these kinds of investments. There's just so much demand for people wanting to align their values and the way they invest, and to see that the way they invest could do more than just create more money. It could actually create meaningful social good.
Oh, fantastic. Okay. And in terms of the asset classes, is this a very broad area? Or, I mean, are we mainly equities? Are we talking about physical properties? We're talking about fixed income. Is impact investing pretty much cover all the different traditional asset classes?
It does. You've got a lot of opportunities in private equity and venture capital. These are often investing in health, in education, in small and medium enterprises, in most of the same asset classes that you would look at for private equity. In real estate, lots of opportunities around social housing, affordable housing, disability housing, as well as things, community design, holistic community design around well-being, whether it's residential or commercial or industrial. And then in the private credit space, we see a lot of opportunities in microfinance, in education, in what's called use of proceeds bonds. So where a company will issue a bond and commit to using the capital they raise from that bond for particular social or creation care purposes. Yeah, so we're seeing it across those asset classes. It is primarily in the private markets. You do have the early inklings of some asset managers in the public market starting to launch impact products, both public equities and public fixed income. Yeah, so again, growing lots of opportunities across lots of different asset classes.
Yeah, well, that was what I was going to ask is what do you see sort of the trends here? Where do you think this space will kind of be, I guess, in 5, 10 years?
Yeah, so there's a few trends. One trend is towards more what I would call democratization of impact investing, more access to people with smaller amounts of capital to invest. Number two, there's a trend towards deepening transparency and accountability for impact investing. As the term and as the approach has gained credibility, more and more actors are engaging in the space. And not every impact investment actually has a positive impact, or sorry, not every investment that claims to be an impact investment actually has a positive impact. And so you're actually, from a regulatory perspective, you're seeing in Australia, in Europe, and in the US, regulators starting to clamp down and say, well, if you're going to use the word impact in your fund title, then you need to be able to demonstrate positive impact. So that's a big trend, accountability, transparency piece. But the third one is just this deepening desire for values-based investments as wealth transfers to, particularly to the next generation and to women. There's plenty of evidence that those two groups are across the board, whether Christian or otherwise, more deeply concerned for alignment between their portfolio and their values. And so the weight of capital is moving towards people who want these kinds of products and who want to achieve positive impact. And so just overall growth in the impact investing industry is very strong.
Okay, it's fantastic and yeah, very exciting. Any sort of challenges or misconceptions you see about the industry?
Yeah, there's a few of those. One of the big challenges that we face is impact washing. I alluded to it earlier, products being issued claiming impact, but being unable to back that up with any kind of evidence. Certainly a challenge. A second challenge is the measurement itself. How do we know that we're measuring the right things to know that we're creating the impact that we're looking for? And the next is dealing with misconceptions around returns in impact investing. There's an increasing body of evidence around the viability of impact investing to deliver market rate returns, but there are different types of products. Some impact investments deliberately target a lower rate of return in order to achieve the impact. Others do not. And so there are risks if someone gets into an impact investment thinking, hey, I'm going to get 10% out of this, but really the product's only targeting 4 or 5%. Returns, then that's going to create a mismatch of expectations and disappointment. So just clarity about what it is that the investment is trying to achieve and whether it is seeking what we would describe as market rate risk-adjusted returns, i.e. the same kind of returns you could get for similar risk in other parts of investment markets, or whether it's what we would call a concessional impact investment, where they are saying, look, there's a trade-off here. In order to get the impact, we're going to have to sacrifice something. And there are impact investments in both of those groups. It's just not always clear which is which.
Okay, fantastic. Look, it's exciting. Look, that's what we've got time for today. But look, it's been brilliant talking to you. And look, I'm I'm personally excited. I think this is a great growing area for the future. And I think certainly our audience will be really excited to know that they can actually ultimately use their money to make a difference, not just get a return, which is, of course, nice and why we invest, but they can also do great good with it as well. So it's an exciting space, and it's been a pleasure to be able to speak with you about it today, Tim.
Thanks, Alex. Great to be with you.